Hello friends, good week. Vladimir here with you, and this is the weekly review for 10th of March 2013. Now we can say March officially started, as we got the non-farm payrolls on the last Friday. As we know, trading months starts after the non-farm payrolls. So what do we have? Well, first of all, I would like to say I am really surprised by the latest news from USA. I must admit, my mistake. I did not see um, this number as possible, but it does. I was clearly I was clearly mistaken with clearly wrong with my expectation that everything is going to stop now. Well, before the NFP, and that with the numbers will be much worse. We got amazing numbers. The question is how it's going to affect, because now it's very sensitive, as we understand, with wonderful numbers and under unemployment rate going lower. Bernanke will have a lot of pressure on him to reduce the bond purchases, his QE, his quantitative easings, right? Um, well, and that's the question: how the market will actually get it, how the market will accept it, right? Uh, from my point of view, as I said not once, the market is reaching its top, and well, I've been talking about it for the last several weeks. The market is still going up, and that's why it's very important to me to say I'm selling the indices. I'm bearish in my opinion about the U.S. market as investment, which means I do not care to hold a drawdown because I believe this is limited. Remember that, it's very important. I'm not trading here with a stop loss to protect myself. Now, I will show my charts and I will explain amazingly important things. Why I'm very strong on my opinion that we are reaching a long-term up, long-term top as for now. But before that, let's forex a bit. Before we talk some stocks and indices, let's forex a bit. I'll start with the pound dollar. I've been talking about this pair also for 2 weeks now, and I said I believe the pound is creating a bottom. Now 149, 148, maybe even a bit lower is also possible. So from my point of view, pound dollar is like more like an investment. Now pay attention. This is a daily chart, but before I would like to start with a weekly chart. Take a look. This is a weekly chart. This is a weekly chart. Let me show it here after the break. Okay, I'll call the line Bollinger Band duplication. Okay, go for here we go. You see that after the base is the break of the weekly Bollinger Bands, right? There is double duplication. See that Bollinger Band duplication number 2. Now it means we are reaching a real bottom on the weekly chart. More than that, this is here after this sideways move. This is the first break, as you can see, right? After the long sideways move, this is first break, and now this is a bearish convergence. Bearish convergence for the pound dollar, which means, yes, I think the pound dollar will keep lower, but we are creating a bottom, and the pound dollar will retrace up. I would say at least the 154 range, which could be 153, which could be also 155. It's 154 range. As you know, for me, a resistance is never a specific level, it's a range of levels. And that's exactly why I think pound dollar is creating a bottom. Now pay attention to that. RSI is aiming 20 on a weekly chart. On a weekly chart. Last time it happened, it was here. Okay, that's the last time it happened here, 2008. Since then, we got a pullback of 1,000 points up. Now, I don't compare what happened now like the 2008. No, not at all. It's completely different situations. But still, you see how powerful it is when RSI is making the same, and Bollinger Band is making the same duplication. Now I don't think we're in front of 1000 pips rise, actually, not from here, because 1000 here will take us almost back to the top. So I think we're like we're about to see some 300 up to 500, maybe a bit more points correction, and then I do expect pound dollar to continue lower. So how I think it's better to trade? Investor style, which means use negative leverage, buying the pound dollar without a stop loss, like an investment. Hold it, let it go in case it reach the next supports, next important levels, like the 148 on the weekly chart, maybe even bit lower, 146. On these levels with a daily candle pattern, of course, just add more to the positions. I think it's going to create a bottom here and push up, and pay attention to that. If it keeps going for 2-3 more days, we are going to get more than 20 candles right on a daily chart for the pound dollar, right on the bottom, which means it's going to be a bottom, and then it will go up to the opposite band. Last time it happened was here, we got a drop down. Before it happened here, we got a correction. Right after that, we got a correction of 300 points, then up again and drop down again of 700 points. That's pretty much what I expect to happen with the pound here. Okay, this is the first pair. Now the second pair on my list is the euro pound. I've been talking about this pair for a pretty while. Now we also get more than 20 candles right, of course. We're playing around the top. Looking on the weekly chart, I said it not once. We can push bit higher. It could take us again to 080. It could take us 099 or even 090. That's all okay. The pair is overrated. Once it's creating a top, and it is creating a top right now, we are going to drop down again. And from my point of view, this level, this range of levels here, between 08250 up to 08330, that's the target that the euro pound will take and reach. Now maybe we are just in front of wedge, as you can see here. Maybe we are now creating a wedge, and it's moving 1, 2, 3, 4. Maybe now we're on a 5. If this wedge is like that, all right, 5. We might go down for a 6. I expected a break and a 7. From my point of view, every up for the euro pound is an opportunity to sell. And as I said, this level here, that's my target. I do think that the euro pound is building a correction. It's going to take time. I hope it will drop like that, right? Like 500 or more points straight. But for me, it feels it's going to make something like that more. Okay, move, 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 move. During April, May, somewhere there, I expect it to reach the line. Well, that's my opinion about the pound, the euro pound, of course. I continue to the next pairs. Euro dollar. Well, that's a pair I've been talking a lot about. For me, as long as the euro dollar keeps below 132.50, 133, it's bearish. I'm bearish on my opinion. Previous week, if you remember, I've been talking here about potential break, as you remember, right? And potential rise on a short term, of course. And after after the zigzagging and around this bottom, up and down, the question is what's next with the euro. As I said, from my point of view, as long as it's below this resistance, that's 132.50, 133 range, I keep my bearish expectation. I still think euro dollar is very able to reach the 200 moving average, probably even lower. Watching the weekly charts, for me, yet it feels very bearish, and well, let's say I will not be surprised the euro dollar keeps all the way to 127, maybe even much lower. There is only one thing I would pay attention to, and this is of course this neckline level. I remind you, this is inverted head and shoulders on the weekly chart, right? That's the neckline, and that could be a level to pay attention to. A stop here will create for the euro dollar a bullish hidden divergence between these two lows, and that could ruin the continuation down low. In case it breaks down below this important support, the 127, we are going all the way down. Nothing will stop the euro dollar. So stay tuned for the supports I'm talking about, of course. Before I go to the yen pairs, which are extremely interesting from my point of view, some great opportunities. Australian against the New Zealandian on a daily chart after beautiful down, after duplication here, A, B, C, D. Now it's creating some retracement up, as it did on the previous time here. I expect it to do the same, pretty much duplication, and if you pay attention, it means above 125, in between 125 up to 126 plus, it's time to look for sales. That's of course a bearish hidden divergence here. It might go and create a continuing divergence on a daily chart. Watching on a daily chart about the resistance is at the same levels as I talked, and it comes closer to the 200 moving average, and we are out of average true range channel above the 125. This is why, from my point of view, once it reaches there, go even for a 4-hour chart and look for opportunities to sell. Alternative, of course, will be the break of this trend line that could open the doors for a sell as well. So above 125 up to 126 plus, or break of the downtrend, opportunities to sell the Aussie Kiwi. I would aim this support as a first target around 123, and of course the previous low as the next potential target. Another very interesting pair to watch would be the Aussie franc. Let me put it here so you can see what I'm talking about. On the Aussie franc, if we measure these two highs, it brings us to around 98 or 98 plus. We are now fighting the 200 moving average as well, and if we measure this trend line, right, so we are pretty much there. This of course is kind of a channel here. Aussie franc is reaching a top. Watching the weekly chart, it still could push a bit higher. If it does, that's going to be bend to bend move on a weekly chart. From my point of view, Aussie franc is reaching great opportunities for a sell. Two ways to go, of course, to watch daily stop. There are several resistances wherever it makes a stop. Okay, here on each of the resistances, maybe even a bit higher around parity, maybe even a bit higher, 101. On each of the levels, it's a potential stop with a 4-hour chart divergence. You can go and attack it. Of course, better investor style. Conservative, I can go and look to break this trend line and then to aim the deeper trend line here, this one, as a target. So the higher we go, the stronger the drop. And again, watch the daily resistances range and a 4-hour chart divergence combination for opportunities to sell. Also, Australian franc is, if it keeps pushing, getting out of the average true range channel, which means the average prices right now are too much for this pair. Well, this is another beautiful opportunity from my point of view, and another one is Euro Aussie. Well, Euro Aussie is very tricky. I remind you that's an inverted head and shoulders, and the pair is kind of testing it right now. On a weekly chart, it's sitting on a 20 MA, as you can see. On a daily chart, creating a bullish slope. If it manages to break this neckline and go lower, it could open the doors all the way back to 124, 123, maybe even 121. Maybe. But stay tuned for this, as you can see, right? Which it can go and stop here. Then I prefer to measure this trend line, this bearish channel, and a break above this channel should open the doors for a rise up. That could be very interesting opportunity to for a potential buy of the Euro Aussie. In case it breaks below the weekly neckline and a 20 MA, most likely it opens the door for further down move. This is my opinion about the Australian pairs. Another interesting pair I've been talking about, of course, this will be the pound kiwi. Well, I'm talking about it for a while. As I said, this is a great way for investment. From my point of view, it's creating a bottom. Again, I would not be surprised if it pushed lower to 175, maybe even a bit lower, before huge long-term retrace. Alternatively, there is a double doji now, so a break above this double doji will confirm that we are probably creating a double bottom, which means then we are going to the previous resistance around in between 184 to 185, and then a duplication of this level and back to 188 as a first stage. For long run, as I said not once, I do think the pairs will go again to 196, then above the 2 much higher, but that's going to take a long time. That's my opinion about well, that's the greatest opportunity so far, I say. And now a few words about the yen pairs. Yen pairs, well, I must admit I'm surprised. I'm still on the opinion we are creating a top before a well, beautiful down move. Now remember, we are now on a cycle period. March, April normally are bearish periods for dollar yen. For long run, of course, I think we are going to 100 and much higher with all the intervention there, but not before serious stiff resistance. Well, we are now dancing 18 candles, 2 more candles here, and that's a weekly 20 candles, right? I don't think the dollar yen is going back to 80, for example, but I do think dollar yen is going back to 90, maybe even lower. Going for a daily chart, well, I don't think it's necessary to just jump in. Wait until the next divergence is completed and created, then it could be nice way to sell. As I said, I do see definitely 90 being retested again. I don't think we need just to jump in right now. Sell with a clear stop, clear pattern, and from my point of view, it's going to take several weeks, of course. And I think this cycle, when it begins, will last until the summer. I was definitely thinking, I thought it's going to start here. It's probably not, and it might go and start a bit higher. 97, very important level, very important potential level for the dollar yen. And another thing to pay attention to note, of course, this situation, this extreme situation, should be treated as investment, not like a trade, just like investment. Now, how does it mean? Well, it's going to affect the yen pairs. Well, euro yen from the weekly chart doing exactly what we expected. First cycle down, did not reach the 20 MA, now pushing up, but MACD is still, as you can see, bearish. So I would not be surprised at all if the next week will turn bearish again and will continue lower from other side. I would not be surprised if we're going to 129, 130, then a stop, and then a retrace. Bigger and deeper cycle will definitely come, or right from here, or from the next high. Again, as an investment, these pairs are creating great opportunities. For very long run, as I said, of course, I do think we are going all the way, well, taking a look on the years forward to 140, maybe even higher again, definitely. But right now, I do think we're creating a top, and it's going to take a while. So no need to attack levels here. Wait for a stop. Wait for a candle. And if it's an investment, of course, pay attention to the levels I've mentioned: 127, 129, 130. This level could be attacked, of course, with a pattern, just to confirm stop. That's about the euro yen. Again, for the short period, medium period, for the 2, 3, 4 months, I expect retrace, then up all the way again. That's my opinion, and of course the same about the pound yen and the Canadian yen. Pound yen is pretty interesting because it still might go and create a weekly, as you can see, head and shoulders, right? Shoulder, head, still on the range of a shoulder, on the high of the previous shoulder. Well, So let's pay attention to that. On the weekly chart also, MACD, despite of the bullish candle, still bearish. So again, I will not be surprised if the next week will be a complete drop down, or alternatively rise up again to 150 or a bit higher before the next important cycle correction. 50-50 from my point of view. I would not be surprised of both. That's about the yen pairs. Of course, CAD yen also very interesting. Well, all the yens. CAD yen now is creating a potential next high. There is a monster resistance here around 96. Watch this out, especially after the daily potential head and shoulders was broken for this. And now to the next world of commodities and stocks and indices. I've been talking about the wheat for a while. Wheat is making a stop on one of the most important supports right now. It still could push a bit higher. It still could push to 630 or even 570. So again, this should be like an investment, right? Not a buy and with a small protection. No, as investment, I do think for a long run it worth to be there, and I do think with when the right time comes, will rise all the way back to this trend line, of course, and the 200 moving average. For my point of view, great opportunity. I've been talking about it for a while. Again, if it goes to 630 and another level to add a trade, 570 will be another level to attack. And a few words about the indices. Well, the Dow Jones, as I admitted at the beginning, I never thought it's going to the levels it's there right now. Historical high. But, and here is a big but, I said it and I really believe in that. Otherwise I would not say that ever. The higher, not the better, the worse. The value of the stocks and of the indices is losing the real market now. And this is exactly why we have to be careful. Now let me show you something interesting. I will show you the S&P. That's the same for Dow Jones and same for everything. That's S&P 500. It's coming out of weekly average true range. It's under massive pressure of the MACD. RSI could aim for in few weeks and reach the 80 level. It's S&P also around the historical high. Could it go in for a new high? Of course. But we are out of average true range right now. Last time it happened was here. Average true range on these places was more flat. Now it's more like a channel. It was here. And it was here, of course. The longer it stays above average true range channel, average true range levels, the worse it is. And I'm talking about the weekly chart, of course. Right? From my point of view, it is definitely telling it's time to get out. Do I think we are going for a huge drop right now? 50-50. It's 50-50 from my point of view. But I do think with all the pressure that will be on Bernanke right now, and with the fact that insiders sell their shares, and the fact that huge companies are going to fire a lot of people, I'm pretty convinced that we are creating a top. I admit, I never think that the Dow Jones will create new high. I thought it's going to stop here. It does create new high. It could even create a new high. But we are under a monster bearish continuing divergence on a monthly chart. We are under a monster bearish pressure on the weekly chart. We are out of average true range of the weekly chart. RSI is aiming closer to 80. Last time that happened, was here before a huge drop. And that's why I think, and I really believe on that, Right now, everyone is saying up, 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 up. It's time to be careful. And sell it as investment. It means you be ready and uh, accept holding a drawdown. Nothing wrong with that. That's investment. Because when the drop comes, your profits will be much bigger. We are creating something huge. Same with the DAX. Pay attention. You see that? I'm not the one saying anything. The charter said pay attention. Could the DAX create and reach the previous all-time high and create even new high? Yes, but we are under a monster divergence. Pay attention to the RSI. It's on exactly on the levels where we got huge drop downs. Something bad is forming. I'm not the one to say that. The charts are. Pay attention for this one. This is Swiss index. RSI is coming closer and closer to 80. Last time it happened was here. Dance, 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 up and then huge crash. That's why I think the higher, the worse. Weekly chart is aiming 80 as well. Something bad is forming. What? Why? I have no idea. I have no idea. And most likely no one knows. We will know that after it happens. But the day that everyone says buy, that's exactly the day I increase my sell. Right now, I know I sound like an idiot. I have no problem with that. Call me crazy, call me idiot, call me whatever you want. I don't care. I really don't care. I also got, and that's the real story, I got reviews. Do you remember my Eurodollar review? I was the only one saying the Eurodollar is going to stop around 137, if you remember. Where is the Eurodollar right now? Okay? And that's exactly why I think I'm not looking to be right. No. I'm not looking to be a genius. No, I'm looking to make money. And that's why I tell you, friends, be careful. Could it rise higher? Yes. I'm screaming that. Yes. And that's the time to sell more. That's the time to sell more. The level of the indices, the level of the realistic economy is far from each other. And it's bad. Another huge opportunity, Nikkei. Weekly chart, RSI, screaming it up. We are closer and closer to week 20 candles right of weekly charts. A month more and we are there. Last time it happened was here after it dropped down. Then we all remember what happened. Right? Before, on 2005, it was dancing here around the 20 MA. For a long run, for 1 year, it was dancing, 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 and then we remember what happened. Once it is happening on a weekly chart, something terrible is happening for the market. What, when, I have no idea. But for me, it's screaming, be careful. And I've posted, I sent emails to my club followers about the taxi driver story. Friends, when your taxi driver tells you, I am buying stocks, it's time for you to sell. And lately I've been to Riga, holding my guest speaker conference. And one of the taxi drivers there told me he is investing now on the US market. For the short run, he is correct, I am the idiot. We will talk in several months, because that's the period I'm talking about. I'm not talking about a week or two. I'm talking about investment. And then we will see. Again, friends, if you want to make money in trading, don't look to be right. Leave it to analysts. Leave it to those who write articles in Bloomberg and Reuters and everywhere else. Okay? We are looking to make money. Remember that. I don't care to be wrong. I don't care to be wrong 80% of the periods I'm talking about. No, I want to make money, and that's why from my point of view, patience isn't it here? And that's exactly what is headed before for the stocks. Now, before I go to the indices, sorry, before I go to stocks, futures, quick reminder about the New Zealandian dollar. I've been talking about this pair, if you remember, and I said once it's going to break this channel, we are going down. If you remember, right here. Well, we are breaking the channel. We broke the channel actually. I was shorting it here. I was wrong on this place, of course. Now we are shorting there. New Zealandian dollar is going down, and from my point of view, you remember this. I told you, breakdown, retest. We are going down. We are there. As long as it is below 083.50, I'm on the opinion it is going down. Target, previous support 081, then 079, then 078, etc. I'm very bearish for these pairs. Now I'm going to some indices, some stocks. I've been talking about the bank stocks, if you remember. This is Goldman Sachs. On a weekly chart, divergence. On a weekly chart, resistances. RSI on the top. On a daily chart, potential double top. I think down from here all the way to the trend line at least. Oops, sorry, this is not the line here. Okay, down to the trend line at least. And if it creates a new high, sell more. With the next pattern, sell more. But well, about the banks stocks, you know my opinion. I've posted a post there. I want to discuss about new opportunities that we are hitting. One of them will be Google. From my point of view, you see that? More than 20 candles right on a daily of Google. Weekly chart, under divergence, under pressure. Could Google push a bit higher? Yes, but time to sell. Time to sell, and I will say it again, time to sell. I would not be surprised if Google will take us all the way to the trend line again. Maybe this time it will even break it. Friends, we are topping. Berkshire, same story. Sell. Weekly chart Bollinger Band duplication. Weekly chart RSI heading the 80. Daily chart screaming divergence. We are in front of huge event. When? Why? No idea. I don't care. And I don't care, once again, to be wrong for several weeks, for a month, for two. I don't care. I treat it as an investment. When I'm talking about the short term with a stop loss protection, I tell you that. When I'm talking about investment, remember, it's negative leverage, ultra negative leverage when it comes to indices and stocks and commodities. And patience. That's all you need to make money on cycle trading. Friends, that's my weekly review. Something huge is heading. When, why, what, no idea. And until then, let's all be surprised from the last news we got from the USA. It's really surprising, and of course I was wrong there. I would not be surprised if this will change within 2, 3, 4 months, when the big companies will start to fire people, as they say, as they claim. Now remember one last thing, and it's very important to me to say. Right now, we're on a party time. Party is always huge fun. It's a big fun. We all dance, we all enjoy. That's exactly the environment right now on the markets. Party becomes dangerous when the attendees there, when the crowd start to be drunk. After they drunk, they're overdosed. That's what is heading the market soon. When the market is overdosed, I suggest you go home. If you're in a party and you see someone overdose, start to make problems, go home. That's where we're heading here on the markets. I know I sound idiot right now, but we will talk again in several months when it all happens, and you will see I was right. Friends, thank you very much for your time watching this video. I wish you a wonderful week. Be careful of the markets, and enjoy trading. That's the most important thing. Enjoy trading. Yours, Vladimir Ribakov.